Welcome to the High Rise Podcast, presented by Headset, the leading data and analytics company for the cannabis industry.
Welcome back to the High Rise, a laid-back, data-backed conversation on all things cannabis, where we talk about U.S. MSOs, Canadian LPs, products, and market analysis through the lens of data. And I am joined, as always, by Emily Paxia of Poseidon.
Hi, everyone. Welcome to the High Rise.
And this week we have a very special guest, Andrew Carter with Stifel. Welcome, Andrew.
Hey, yeah, thanks, Cy. Thanks. Happy to be here.
Yay.
Yeah, it's great. It's that time of the year again. We're in earnings season, so really looking forward to our conversation in a bit on all the companies that you cover and what's going on there. But I thought this week we'd start with one kind of thing that came up and related to Headset here. And MJBiz, they published an article earlier this week, I believe it was Monday, and the article is titled "Adult Use Cannabis Sales Slip from 2020 Pace After Lackluster Summer." And it was a pretty rough read. The metrics that they published looked really bad, and actually, since publishing it, they've corrected because they misinterpreted our numbers, and somehow they got the numbers transposed, and things look a lot worse than they actually are. I think the takeaway, I mean, there's a lot of takeaways from this, certainly, but the things that, we see here at Headset is certainly, growth is a bit slower than last year's growth in certain markets. And this article was very much talking about maybe some of the more mature markets. When we look at some of the emerging markets, growth is actually, pretty high because they're new growing markets. But I wanted to point out a couple of things. I mean, apart from the data kind of just being misrepresented, one thing is just like an article around growth and comparing growth rates is really tough in today's world with like the pandemic and just kind of balancing out the dynamics that happened in, May 2020, April 2020 and on with every industry. But the cannabis industry in particular, we saw a lot of growth immediately because of panic buying, right? We didn't know if cannabis retailers and dispensaries were going to be considered essential services. And because of that, sales were up pretty high. And when you look at this article, you will see, high growth in the beginning of 2021 versus 2020 in the early months because, January, February, March, and even into April, it was still, pre-pandemic, right? And then once the pandemic hits, sales go up. So we saw an inordinate amount of growth in 2020, I think, than we would have had there been no pandemic. So to kind of just compare and just say, let's just compare growth, I don't think it tells the whole story. And I think that, we're dealing with this across, I think, any category. I was just reading this morning about the jobs report from October, and the jobs report came in, I think, 500,000 new jobs were added in the US. And I remember the September jobs report, when that headline came out, it was really bad. It was about 200,000, I think under 200,000 new jobs. And I think the estimate on Wall Street was 500,000. And so the question was, are we back? Is the sky falling again? What's going on? And then now we're back, and it's kind of like this yo-yo. So to really kind of find patterns in the data, I think right now is quite tricky, but also like just a little unfortunate that they published some of these numbers. When it was originally published, it said things like Nevada sales are down in 2021 versus 2020, which is just like doesn't pass the smell test, because you think about a market like Nevada, a lot of sales are driven by Las Vegas, and Las Vegas was shut down, right, in 2020 for a long time. So you didn't have those tourists coming in. So, it's been revised, those numbers have been updated, so that's good. But I think it just, when you think about growth and you think about the industry, and I know we talk about growth a lot on this show, you really got to kind of dig deeper into like, what does that mean? And when you compare month over month growth, it feels like we've been in this for a long time. And when you look, year over year, remember what the world was like in May of 2020 versus May of 2021, and how those might impact different growth ratios. So just wanted to point that out because it was pointed out to me as people started kind of noticing some of the data out there.
Yeah, and I mean, this just speaks to the challenge around when people get data in their hands, you have to be careful about how you talk about it, how you present it. And especially given the sensitivities around our market right now, I think it's just really critical. So this is why I'm such a big proponent of, good data to begin with, good and timely data, because things move so fast in our markets. And then the ability to really analyze and understand it and put information forward. And to me, the data that got confused is not hard to understand, but
Right.
it was an alarming article to read, even for me. And I know I called you right away because I was like, wait, how could this possibly be? Something doesn't seem right, to your point about doing a gut check around the
Sure.
veracity of the data. So I'm super glad you dove in on that, and I'm glad we could correct it here. The other thing I should note is that we are operating as a world in an incredibly difficult time right now. We are in and out of a pandemic. I'm in Miami. Everywhere I wear a mask, I'm a total oddball here. So there's like no COVID here as far as I can tell. And that's the mentality. And good for everyone seems to be having a lot more fun than I've been having for a while. Well, no, I'm lying. I've been having a great time. But that's the situation here. But then I'm reading about in Europe, they're having some of the peak case rates right now of COVID. I mean, this thing is far from over, and we're going to see kind of undulating shifts in how people are feeling, the climate around spending and different categories of spending, the willingness to go out, the willingness to fly. Morgan, he even said it today when we were having our team call. He's like, Europe has kind of been a leading indicator to the United States of when we're going to see spikes in COVID rates. So we could be plunging back into something going into this holiday season. Who knows? So, I mean, and also this is the first Thanksgiving a lot of people potentially will have been together. And we all know that people stock up on cannabis before they have to be with their families, especially given the politics in our country these days. So I don't know. I think it's just going to be interesting to watch. And I would say we're not seeing normalization of any behaviors for a long time. And this has impacts more broadly. Like, I think we all saw what happened with Peloton stock. I think it was down 34% the last time I looked at it today because of kind of misguidance and misunderstanding around what was going to happen of trends when the world started to quote unquote turn back on. And we've seen this trickle down into other areas of commerce too. I mean, even like look at Zoom. So all of that goes by way of saying we are not in a vacuum in the cannabis industry, and we all have to be very sensible about how we approach the different trends that we're observing in the industry.
Yeah, and maybe that Peloton stock will bounce right back after Thanksgiving, right? When everyone...
I give it New Year's.
Yeah.
I don't know. That thing kept me from doubling in size during the pandemic, so I'm not mad at it.
Yeah, no, all good points, and I'm glad we're able to clarify that. And data can be a very powerful thing, right? And you got to be careful about, one, publishing the right numbers, and two, just how you find your outcomes like from the data, I think is critical.
I feel like it's like the Force. You have to wield it for good, not for let it take you to the dark side.
Or like is it Spider-Man with great power comes great responsibility, right? So,
Ooh.
Yeah. So that, kind of moving on from that, I do want to start in the U.S. a little bit. There was a headline this week about JP Morgan. And, Andrew, I'm sure you have some insight here on this stuff, given you're in the financial services world. But for the listeners, just a bit of background. So JP Morgan announced that the bank will no longer serve as a custodian for prime brokerage clients who want to buy cannabis stocks, particularly the cannabis stocks that are listed not on New York Stock Exchange, NASDAQ, or TSX, but the ones on the CSE. And, most of those, are domiciled in Canada. So anyways, or the stocks, I should say, but the companies are U.S. companies, right? So U.S. MSOs and ETFs and you name it. So what they said about this, they didn't say that it's necessarily because it's cannabis. I don't think they said we're shutting this down because we have a new cannabis policy, but they cited U.S. anti-money, I can't talk today, money laundering compliance framework, right? So they're really pointing to money laundering as the reason for this. And I know cannabis is an all-cash business for many operators. And obviously, cash businesses may have more opportunity for things like money laundering. I think that's a big reason why a lot of banks have so many challenges working with cannabis operators, even though many banks do service cannabis operators, local banks and so on. And so, I know this has happened before. Credit Suisse happened earlier, kind of different context. I think that they got in some big trouble with some of their compliance risk management. They lost something like $5 billion with the Archegos thing. And so that maybe drove that decision. But where does this come from? Like, what do we think? Is it really money laundering? I mean, it's not. Are other banks going to be doing the same? I don't know. Andrew, do you have any thought on this?
Yeah, well, I'll tell you, I mean, it is proceed cautiously. We as a firm, we've been very cautious about it. And almost to the point, even like, I would say that Stifel, we've we've probably been a little bit more aggressive on my side of the platform, at least, of working with WM Technology or Grow Generation, guys that actually service that, and even that there's checks. And I can also tell you from my experience with the Hydrofarm IPO, we had Hydrofarm actually does not sell directly to growers in the U.S., but they'll use a reseller like Grow Generation. I had investors who went through painful detail with me of understanding who Hydrofarm's customers were. So it was some of that. I guess my perspective on the latest kind of round of news is throughout the year, it's just another thing that has just compounded the inefficiencies of kind of the capital flows in this sector. And it was one more thing. And in a year that I thought, risk tolerance, given the change in administration, a U.S. or an attorney general not hostile to cannabis, at least, not who knows if he's friendly or not, but not hostile like the former two were. Jeff Sessions, or Attorney General Sessions, obviously being very overt about it. Sure. Attorney General Barr being a little more covert about it. I'm surprised that everything's gone backwards this year, and I'm very surprised. But in fact, I was surprised this was that J.P. Morgan hadn't done this a long time ago, to be quite frank. Just knowing that the sensitivities and how that's something you don't want to risk. You don't want to risk your bank holding company. You don't want to do any risk on that. So that's kind of where it is at this point, and it's something that, it's something that I think is one more reason to clear up that untenable disconnect between federal and state law. But it's not a policy issue that is at the front burner for lawmakers. So that's the way I see it.
Yeah, really, really good point. And I know a lot of the companies you cover are the companies that are listed on the New York Stock Exchange, NASDAQ, and so on. Canadian LPs and WM Tech, Weed Maps, is that NASDAQ?
That is NASDAQ, correct.
That is NASDAQ, right. But yeah, no, that's an interesting, I guess, dance that you have to do around this stuff with your clients. Do we think that, is there more risk of other banks? I mean, how many, I have no idea how many JP Morgans there are and like how much this impacts, I don't know, things like stock prices, right? If you can't trade anymore, right? It's just like one more block of people that are unable to trade. Like, is it just, it hasn't been a good week for cannabis stocks. And so, things like this don't help. Is this something like, it does seem out of the blue, like your point, Andrew, like you're surprised it didn't happen earlier. But when this headline comes around, do you think other banks are now, in their meeting room saying, hey, JP Morgan did this. Do we need to be doing something like this?
That's definitely a question that they have to have. And Emily, I'd be curious to hear your perspective on, where do you even go? Where do you go at this point? And it's a very, very difficult situation if you're an owner of kind of the MSOs or these stocks.
No, it's funny. When I saw this, I was like, wait, because JP Morgan has not been, a bull on this for a long time. And in fact, like when we've had investors, first of all, I bank with them, probably not long after this, but personally, but, I feel like we've had investors who had trouble even investing into our firm if they had a JP Morgan Chase account. So, for me, I'm like, wake me up when this is all over. It's all the same. It's like a same shit, different day. And I feel that, maybe, I saw Jeff Schultz. He's a super savvy guy. He understands dynamics on the legal side. And he pointed out maybe this is he called it a clean hands thing. Like maybe they're going to like try to wipe the slate clean. And then when we get banking reform, they can just approach it and be like, see, we were never engaged in pushing the edge of the envelope. But I have to give a ton of credit to groups like yours, Andrew, because this is an immense opportunity, and I think the operators will remember the people who were at the table with us when it was really difficult. And so I don't know. It will be interesting to see if some of these other banks do take note of JP Morgan. I obviously read the letter, and I do have a lot of questions because I've seen other banks who've restricted trading around these things based on maybe market cap, or again, like you mentioned, NASDAQ versus OTC. Like there's different factors that they've weighed in on. And also like, I think that, for example, like a GTI or the ones who've done a lot of work to be basically NASDAQ ready in terms of how their governance is set up, in terms of their reporting and their auditing practices and all the steps they're taking. I think that's made it easier for some groups to play. But yeah, certainly this was not good news in a tough news time of the industry. But As you know, there's a very savvy investor who's now in the space, and I don't know if he'd be comfortable with me saying his name, but the other day I got on the call with him. I said, "How's it going?" He's like, "I don't know, down 5% is the new flat in cannabis." So it's like, here we are. We've been here before. It's disappointing though, nonetheless.
Yeah, I know a lot of people are talking about, the bottom, right? Hitting the bottom and, not going any lower than this. But yeah, the down 5 just kind of continues. So doesn't seem like we're there yet, but we've got to be getting close. But things like this certainly don't help.
I mean, in sailing, we have depth sounders so you don't run aground. And I feel like the depth sounder's been going off for a while, but we're still not, we haven't run aground yet. We're still looking for the bottom. Oh, man.
Well, yeah, interesting headline. Yeah, just some, I guess, tough news, but hopefully the banks that are still outstanding and still do support this industry have already had that conversation, and this is like a non-factor for them. It's not a new thing. Cannabis has certainly captured a lot of the media cycle and attention for some time, and I have to believe that bank compliance and the people involved in making these kind of decisions have had these conversations already. It is just surprising that JP Morgan is just now kind of doing it so late in the game. But we'll stay tuned to see what's next around that. But still on the topic of the USA, we had elections this week on Tuesday, and I wanted to bring this up because it didn't bode well for the Democratic Party. And, Andrew, you made the point earlier of in this climate, right, this new administration and, things should be at the very least loosening up around cannabis, even though not much movement has happened. A lot of talk has happened, but not a lot of movement. But now I feel like based on these election results, we're in a bit kind of a even riskier situation as far as, cannabis and being a platform for the Democrats, even though, you're also starting to hear rumblings of that this idea that there's a GOP kind of play that's possible where they could steal it from the Democrats and kind of take it. And we used to always say in cannabis, it does bring people together across party lines for different reasons, right? Like on the GOP side, you have more of small government, right? Government shouldn't be driving so much of what I do. And on the Democrat side, you have, the social equity, social justice side, right? And so from both sides can agree that cannabis legalization is good for one reason or another. Maybe the reasons are different, but something needs to change. And now we have this situation where, the Democrats lost pretty badly. And I want to call it this New York Times article that was published yesterday from their editorial board. And when that happens, it's a pretty serious article, I think, and their editorial board is generally pretty informed. And it was titled, "Democrats Deny Political Reality at Their Own Peril." And they made some interesting comments in this report. They said things like, what's badly needed is an honest conversation in the Democratic Party about how to return to the moderate policies and values that fueled the blue wave victories in 2018. Not that those were necessarily great for cannabis. I mean, 2018, there were things like the Holder memo, that kind of gave us some more room in the cannabis space. But, we obviously didn't see, legalization or anything. But this New York Times also said Tuesday's results are a sign that significant parts of the electorate are feeling leery of a sharp leftward push in the party. And when I think about, a lot of the legalization talk has been around the Cannabis Opportunity Administration Act, from Schumer and Booker, and a lot of that, has some policies in it that I think don't square well with a lot of the GOP kind of outlook, and a lot around the social justice side, social equity, and obviously, it's not what we would want something like this, but there's political realities of getting something like this across. So I bring all this up because if they are not totally stupid and they think, okay, this is a serious wake-up call for us, how do we adjust this? And there is this commentary from the editorial board about push more towards the center, more towards Americans that want to have a functioning government and still believe in democracy, but maybe aren't super on the extreme left wing of certain policies. Does that impact things like the Opportunity and Administration Act for cannabis? Is there any hope for something like this? Or should the Democrats really just look at something like safe banking and say, what, we need some small wins here to keep it before we lose it, whether we lose our position or we lose just this policy, this progressive industry to the GOP. So what do you think it means for this, knowing that they are well aware of like what's on the horizon in the next couple of years for the Democrats?
I guess I would start to say is I just question how salient cannabis is overall with the population. I mean, you have 11% of monthly users. The decriminalization side of it's, you can look from a conservative's point of view, it's you're wasting money and resources to go after somebody for simple possession. From the other side of the aisle, yours is, hey, you got uneven enforcement, and that's a problem. So you have that policy issue, but I always go back that, you know, at the local, that most of those things happen at the local level. It's not, if you have a federal marijuana crime, usually it's trafficking or something serious. So you can't really fix that issue at the federal level without just fully decriminalizing it. But at the state, I think the progress is it works kind of for the industry and against it. At the state level, you'll see, you know, you'll either see explicit decriminalization or implicit of, hey, the police department says, don't waste my time with a marijuana case. I don't want to do it. And I've actually heard from that big city like Louisville that they'll say something like that. But then you get into like the reasons why it should change is just the untenable disconnect between state and federal law. The money's an issue, the capital markets inefficiencies, and in my view, like because of the inefficiencies of the capital markets, I think it's allowed a lot of bad actors to really profit because you don't have Stifel or the bigger banks covering some of this and coming at it from the research from a thought leadership and ethical standpoint. Let me be clear, by the way, I wanted to make sure I give a plug to my colleague. We do cover it on the other side of our platform, but and Andrew Parthenow, he does a great job from a thought leadership standpoint, but there's still the doing business we don't do. But I just kind of question that, and then you say, you know, a win. I feel like the progressive Democrats painted themselves in a box on SAFE and said, hey, this is just doing something for the rich, making the rich richer. And no, that's exactly the opposite. The current environment, inertia, makes the rich richer. If it's hard for Bob's cannabis shop to get a bank account and pay through the fees, well, that's a benefit to pick your favorite MSO, GTI, Cureleaf, etc. That's where I struggle with, and it's just gotten caught up and bogged down by, you know, the progressive language that turns some Republicans off. I was surprised to hear some Democrats actually say, I think, I forget the name, but call marijuana a gateway drug. We can debate on that one all day, but that came from the Democrat side, and that was surprising to me. So I look at it, and I just don't think there's any momentum. The only silver lining I've heard, and we wrote to this, is that potentially SAFE Act, I think the NDA, the way it happened, that might be the template as a writer, that it has a hope late next year. And really what it is it's a focus of Schumer as he's going to inquire a primary challenge. He wants the talking points of pursuing full descheduling, plus he doesn't want to give anything to his, you know, potentially progressive opponents. And then maybe later, which I think would be, you know, actually a great thing from what progressives' actual aims are. So, stop there.
Yeah, it's great.
I just wanted to share that Marijuana Moment just tweeted. I love it. Marijuana Moment, by the way, they are on the front edge of all this stuff. They literally just tweeted after we started this that he got a copy of the draft of the Republican language around their legalization bill, and he just tweeted about it. I just retweeted it, but it doesn't look so bad. And if they put this forward fast, that could be very, very helpful for us, because I think then it puts the scramble on the Democrats, because I think this issue you can't, like as Andrew was just talking about, as we talk about, this thing polls so well. How could you not want to have ownership and win with this issue at this point? And so I think that if the Democrats give this up, especially considering what happened on the election the other night, I mean, there are warning shots across the bow on this. So I think on the whole, this is good, because it actually looks very industry friendly. They even carve out a note that the FDA would not be getting involved in this, which I think is a very important signal to the industry. So I don't know, I'm here for it. I'm like, let's push. And if this is truly, as we've been talking about, a bipartisan issue on the whole, then I'm glad someone's listening to the constituents.
Right. So they tweeted the language.
He tweeted the summary of the language just now. So, I mean, I don't think we have time to run through it, but it sounds pretty interesting. Like they're talking about allowing incumbents to remain functioning. I don't know. I mean, I just think that if action's being pushed on both sides, as long as it's not trying to do too much, like as Andrew pointed out, the Democrat version of this did. But this even just this language getting out there, I think is very interesting. So.
Yeah. That was going to be, even before you brought that up, like the question I would have had is like, do we have a better shot with the other side, with the GOP, if they do well in 2 years' time from now? And Andrew made a good point. Like maybe it's not that compelling to a majority of Americans right now, and it's state by state, and the states that have legalization are not so much of an issue. But I wonder if it's, a lot of the safe banking is access to capital, and there's a lot of voices in the room that are saying we need change here, right? And I hate 280E, and you've got to fix this stuff. And maybe they're bending the right ears of a group like the GOP that can say, okay, well, we're going to listen to this group because there's a lot of money sloshing around here and needs to be fixed. And maybe when it's fixed for everybody, and the smaller guys can come in a more easy capacity. So it's interesting. I'll take a look at this, but maybe regardless, it'll light a fire under somebody's ass, I hope. And we see something, because after this week with this kind of headline, and then if this comes out, it's like, how many platforms do they have that are, that can really get a lot of younger voters out that it's a broad spectrum of people out there and different opinions under the Democratic Party. And like, it's one thing that kind of, I think, combines everybody. But if the GOP has it, you could see pulling more center people there too, right? Which is, not great if you're not part of the Republican Party. But if you're Republican, I mean, chances bode well for you at the next big election, it looks like. So let's see what happens.
And I think we're going to have to stay tuned, because I think the Gen Z, is a very interesting, I've been reading a little bit about their political manner, like the way that they're approaching politics. And I think we're going to be seeing quite a shift in terms of our two-party system as they move through, as they grow and become more established adults and voters. I think we could see some, I don't know, and it probably would be a good thing. I think that we've got some real inefficiencies in government at this point, and it would be nice to see some things revitalized. So we'll see.
Tough week all around in the U.S. here. So let's get out of the U.S. Let's talk about Canada, and I guess some U.S. too.
Yeah, I'm gonna sit back and let Andrew run this. You guys are the pros on Canada, so I can't wait to hear this.
Well, just for timing, today Canopy Growth's earnings came out, right, Andrew? Was that today? Yeah, that was this morning, and I think the short too long didn't read doesn't look good for them. Would you agree?
Yeah, I think they're in a tough spot in general. So it was, looking at the stock right now, it's down 12%, which is improving just a little bit, and I believe they were down 33% heading into the quarter. So it's, you're not even getting the relief rally. You had slight miss on revenue. We knew revenue was going to be bad. CEO telegraphed that in September. The profitability was bad. It was probably just about even with last quarter when you strip out the COVID benefits that they included in adjusted EBITDA last quarter, and which was surprising to include that in your numbers. $20 million last quarter, $7 million benefit this quarter. But profitability is about in line with last quarter. And the big thing they did today was they withdrew their positive second half EBITDA guidance, which they introduced that just earlier this year in February, along with a medium-term outlook for the next 3 years. And, we've been writing that, we think that Canada is a structurally difficult market for everyone, for all the private operators in the value chain at least. And it's, when you're a producer and you're like Canopy, and you have a lot of fixed cost infrastructure, which they have, and then you're losing market share because you struggle to find what the consumers want and launch it at the right price point. And then when you adjust, this is a long lead time. This isn't beer. This is a plant where you have to go through growth cycles. So I think they've had that problem, and it just, withdrawing this, you have limited confidence in any of their medium-term growth outlook. And the other side of it is that there's the balance sheet risk here. This was the company that a couple years ago, if you got me on this podcast and I told you why I like Canopy Growth, even after 2 years ago, this time they reported a pretty bad second quarter, I said, look, they have all this cash. They're going to be able to survive any kind of shakeout and invest behind new opportunities. Well, what we found out, going back to the inefficiencies of capital markets, is a lot of these companies that were, penny stocks or whatever could raise capital. The MIM craze really helped. It made the market more competitive. I guess the best example of Canada is the market share leader in Canada right now, Hexo, has a going concern note in its financials. So you have all that, and now we're looking 2 years later, that capital advantage doesn't exist anymore. And they have 1.9 billion of cash on hand, but they also have about $1 billion Canadian of term debt, 600 million of convert debt, and they're going to pay 373 for WANA, or I think Canadian. I think that's, don't hold me to that. It's 298 US. But they're going to pay for WANA something that may turn into a great acquisition. I know I've heard a lot of great things about the WANA team, but the reality is it won't give them anything over the near term until they're able to consolidate that business. And oh, by the way, all these partnership agreements that WANA has outside Colorado, they have to let those run their course before they can, even if, say, legalization happened today, they'd have to let those run their course before they could attack it from a national supply chain. So you have the balance sheet risk growing, you have the losses continuing. It's just a very difficult situation, and I'm going to go right back to, I guess, what my favorite term on the podcast today is, the inefficiency of capital flows. You still have Canopy trading at a significant valuation, which is, right or wrong, it's some kind of scarcity premium that of people that can invest, in this, maybe a lot of smaller holders. We learned that from the Tilray when they went back to their shareholders. It's a lot of holders that are in this name, for whatever reason, because it's salient and easy, and they have this premium. So it's one that, we've been negative on, and, we, on the print, we wrote very negatively on the print.
Yeah. My favorite is when Andrew does his one-word reviews of things. Negative.
Oh, the quick word.
Yeah, the quick word. Sorry. Yeah. That was me. 2-word review. Shit sandwich. Of course, I'm not speaking directly about any specific company because I cannot. So I can just speak generally.
Yeah. Do you think Canopy is unique for all those reasons you pointed out? Do you think that it'll be a similar story from the other earnings for the Canadian?
Yeah, well, I mean, Tilray reported already, and they were, Tilray wasn't anything to write home about either. I mean, they were down, double digits from an underlying growth perspective. It's just a tough market. I guess the difference with Tilray is while we're essentially neutral on Tilray, but I guess the difference is Tilray is in a position where free cash flow's on the horizon, on the short-term horizon, and they are generating positive EBITDA. But for the others, I mean, it's going to be, we can see it in the, I guess I'll plug your company, Si. We see it in the headset data that the bigger companies in general are losing the market share. There's only a couple. I think Kronos is doing well market share wise from a small base. They've actually built a pretty good brand in spinach, but when you get to their financials, you can see that their asset light strategy is tough because what they buy is actually expensive, like stuff that people actually want to consume. That's actually somewhere where Canada's oversupplied on one hand, but has short supply of the other, and then we'll have so you have that, and you don't know where the company is in their investment cycle, and then you also get into Aurora, which will be next week. I think as well will reflect the Canadian market's challenges. Yeah.
So do you think that the market share, are they losing it to other smaller brands?
It seems like the fragmentation's really continued overall. I mean, thinking back to the data, it's just to give you a data point, outside the top 10. And this top 10 even includes when you put Tilray and Aphria together, when you put Hexo together with all its brands. It's gone from start of the year 25% non-top 10, even including the consolidation, to 39.5% today. And like I said, we do the headset data. Every time we run it, I find usually every single month when I run it, I usually find about 5 or 6 new producers in market and probably 20 or so new brands. So the fragmentation's continuing in spite of the market's challenges. From that perspective, I don't see any light of the tunnel near term. So yeah, it's tough for the bigger guys. It's a very difficult supply chain when you have right in the middle, you have a very fragmented retail base, which would work for suppliers, except there's no established brands, and it's very hard to do a program where you're gonna call on one retailer, do a top to top. It's when the biggest one's 5% of the market. It's very hard to efficient to do your top to tops. And then you have the middle, you have a provincial buyer who can basically, if they buy something from the producers and it doesn't sell, they can send it back. If the retailers bought it, They bought it, they own it. They sit in that nice little spot, and they don't really have any incentive to manage the category more profitably. They have a fixed excise tax system, so price deflation actually works to their benefit in terms of getting more volume for the category and growing their excise tax base, which is more volume. So it's just tough in general for private operators in the space in Canada.
Yeah, what Tilray CEO Irwin Simon was calling it the ankle biters.
That's the term he used. I don't think it was received well, and it's I don't know. I guess I go back to the first scene in Gladiator when Quintus says to Maximus, people should know when they're conquered. And he looks at him and says, would I? So it's one of those things. You could say that all day, but the smaller guys out there are going to fight. And I guess we've also written this. If Canopy's going to buy Supreme and Ace Valley, then you just gave one more reason to hold out just for one more month and wait and say, if we can just build a brand, somebody can buy us.
Right. Good stuff. Interesting point about Wana, because I know Wana has a lot of licensing structures with their brand in other markets that they're not directly licensed in. They're based in Colorado and they're in pretty much every market in some way, shape, or form. But yeah, licensing structure. So that is interesting that they won't get access to that, even if the U.S. legalized tomorrow. So that's going to be, and I'm sure those agreements must go out pretty far.
I don't know what they are, to be clear, and I believe that I've looked it up and see it's very disparate, like who their partners are in various markets. Like here in Missouri, I've heard it's Clover. In Illinois, I've heard it's Curaleaf, actually, which they inherited from Grassroots. Those are a couple I know are off the top of my head, and I don't know the length of the agreement overall. They didn't, because it was a private deal for Canopy, they didn't have to disclose a lot of things. But to that point, all they'll get is Colorado. Of course, I would assume they're trying to work with Acreage to launch the product in New York. But I would also caution that this is the first time Acreage finally has some bargaining power versus Canopy Growth in this Wana deal. And, Canopy wasn't kind to them last summer when they renegotiated the agreement, more than anything publicly disclosing the covenants. So we'll see what Acreage does this time.
Yeah, quite complex, I'm sure. But a good outcome for Wana, certainly.
Oh, great outcome for Wana.
Yeah, for Canopy, we'll see. So kind of let's chat a bit about what's next on the horizon. And you guys released a cannabis earnings primer with some dates. So what can we expect to see? Like, what should we all be watching for? What kind of interesting things are you looking for in the days ahead here?
Yeah, sure. I mean, I don't cover the MSOs. As I said, my colleague Andrew Parthenau from GMP covers that. On the other side, he released a primer as well. I won't speak for him. And actually, legally, I'm not allowed to either. So anyway, but what I would say is kind of what we're looking for is what we see right now is the slowdown. You mentioned at the top of the program, the growth has slowed in the U.S. We're still trying to dig in. We're trying to find, is this a tough comp issue? Because the category accelerated last year about this time, September, October time frame, particularly in mature markets, Colorado, Washington, Oregon, California, and we're just seeing the slower growth, and it does have an effect on, I'll step away from my Canadian companies. I do cover 4 companies essentially with exposure to the ancillary U.S., 3 hydroponics, Grow Generation, Hydrofarm, and then Scott's Miracle Grow, which already reported, and then WM Technology. And I think they're gonna feel the brunt of it. Hydroponics feels kind of the worst of it because it's 2 or 3 steps down the supply chain from production. So if you slow production, cultivator's going to need less consumable products. Retailer reseller is going to keep less. So that's going to be 2 or 3 steps. So it's one of those things that there's been a lot of skepticism and a lot of it's kind of contributed to the overwhelming negative sentiment for these names. That's why Hydrofarm pre-announced, GrowGen pre-announced, Scott's when they gave an outlook, they were below the growth range for hydroponics that they said for the quarter. They did -2 after saying, in August. This just highlights the limited visibility. They said 0 to 15 for the fourth quarter. And then those other 2, they've painted a pretty dim picture. And it creates it's all 4, those 3, the hydroponics are all stocks that I really like for their ability to profitably capitalize on the category. Also a scarcity premium, which I don't think is being appreciated right now. But it puts the worst question in front of an investor looking to be constructive on a name, which is the question of why now. And, to that end, it's, is written, the near term, it's about getting through this. Now, I will say hydroponics, there's a lot it's negative data points plus uncertainty, and the uncertainty kills you. That's why we, I think, saw such a snapback when Hydrofarm pre-announced negatively. And then Scott, same thing when they reported, although that had to do a lot with kind of their confidence in the EPS for the year. Then for WM Technology, the good news is they're a little bit closer to in sales. They're going to be, their market opportunity is what is signing up new clients, getting them on the platform, getting the increased revenue spending. But when you go from your mature markets doing something like plus 29% in 2Q20 to plus 8, that should impact, and we'll get clarity on this, that should impact their ability to buy and invest behind the ad tech platform. We'll see, but it's something we wrote that they put a guidance range out with the DSPAC of 205 for this year, and we did lower our estimates with the earnings report. So again, that one right there, given the guidance, is outstanding. That's another one that just creates a why now case for investors.
Yes, lots to track in there. So much going on. You mentioned kind of the growth we saw this time last year in the industry. What was like the second wave of COVID? Was that in October and November?
Yes.
That's kind of when we had that big second wave come through. It's all a blur time. And yeah, the fact that we're in November now. But yeah, maybe there's the difference, right? We're not necessarily in a wave right now. I think cases seem to be declining, even though we're still in the midst of it. Or if you're in Florida like Emily, where it doesn't exist at all. Yeah, I wonder, how much of that has to do with it. I could look at some of our data as well, just what kind of overlay those things. But yeah, interesting. It's always an interesting time of year with earnings coming out. So I think we'll be able to watch for those things that you're pointing out, and I'll take a look at your colleagues' report as well on what's going on with the U.S. MSOs. All right. Well, I think it's a good place to end here for the week. We've got a lot coming up next week with all these different earnings. We're probably going to push the recording a bit later like we did this week to be able to capture a lot of that. Correct me if I'm wrong, Andrew, because you're the expert here, but I think next week, and I know you don't cover all of these, so that's okay if you don't know, but I think next week we've got Curaleaf reporting, Aurora reporting, Verano, GTI, Columbia Care, Ascend. Does that sound right? Who am I missing on here?
Yeah, you got a lot of them. Yeah, I think you missed Grogen, Hydrofarm, WM Technology. Of course, big thanks to them. They put them all on Thursday for me, so thanks, guys. Then you'll have Agrify on Wednesday as well, but I think you nailed it pretty good.
Awesome. And Grogen, Hydrofarm, WM Tech, I know you cover those, and I don't think we spend enough time talking about those kinds of groups, Emily, so we'll start taking a look at those because they're all part of this big, crazy industry.
I think it's a great idea. It's also interesting timing. I remember last year I was on CNBC on 11/11. Actually, Andrew, you were very helpful in giving me data points for that. And it was funny because they were trying to guide me to talk about the Canadian names. And I was just saying, I was like, no, the story here is the US. And we were talking, and Andrew's been doing a great job in this conversation of pointing out the thing we talk about, which is that these companies are all very different in many ways. And so we have to get more sophisticated in the way we talk about them as a whole, and not just as, investors or whatever. But I think that I'm interested to kind of reflect back on where we were at 11/11 last year. Stocks in the US had already been moving up quite quickly at that point. So I'm wondering, like we said, we've been feeling out the floor here. So I wonder where it is. I heard that the stocks were ticking green on the US names during the recording of this podcast while that news broke from Marijuana Moment. So
I'm looking at my screen. Basically, all the big MSOs right now are up low double digits.
There you go. That's not the down 5%, the new flat anymore. So let's hope that trend continues. Well, thanks so much for tuning in. Andrew, thanks so much for joining us. Really, really helpful to have that special insight that you're able to produce. If you're enjoying the show, be sure you subscribe and rate us. It goes a long way into helping us build the audience. And we'll see you next week with more cannabis market news.
Thanks for listening to the High Rise Podcast, presented by Headset. For more information on Headset, visit headset.io.